This is coming to a head. We're in a rising wedge, which is usually a terminal pattern, at least it's the final pattern in a time frame on stocks. And of course, these rising rates, the excuse is, well, yeah, but it's just because the economy looks to be better with the COVID recovery and all this stuff, and compete with stocks. One of the reasons stocks are so crazy overvalued in the worst economy ever is that zero interest rates, even long-term, are at 0 to negative. In most countries, negative. Even the US right now, a 10-year treasury bond with roughly 2% inflation short-term is a negative category and stuff. So we're in this thing, and so there's not a lot of reason for the markets to go down. But I think this is an illusion here. And we got to step back a minute. One of the reasons there seems to be no reason for markets to go down, you got this endless stimulus thing. I mean, don't you think they're finally overdoing it here? I mean, come on, close to 4 trillion in QE since the repo crisis. And now the most recent total, 5.1 trillion with the new 1.9 trillion fiscal stimulus plan. And remember, fiscal and monetary together add up to 9.1 trillion now, 44% of GDP. But the fiscal does have a different impact. The fiscal actually does largely go into businesses and checks to consumers and stimulus things, local and state governments that actually feed into growth in the economy, and that can also feed into some inflationary pressures. Now, again, we've proven now 11-year recovery that no matter how much stimulus and whatever happens, inflation is dead. So we're not going to get runaway inflation here or even high inflation, but it is creeping up a bit for now. But you got to remember, the underlying trend here is that we're in a deflationary period. We have slowing demographics, which are getting at their worst now between 2020 and 23 with the bottom of the baby boom spending cycle. And all of this debt that's much higher, now this financial asset bubble, all of this weighs on the economy and crimps future growth. So I think what we're going to see here, I think this is exactly where the market may end up peaking when nobody sees any reason for it. It's just, it may take another couple of weeks or so. It may take into April. I showed in an update recently that this rising wedge is going up so slowly at this point that it could just continue well into April. And there's a couple of things that I think could happen that people should be looking for. One, Bitcoin. Bitcoin has been so far in its brief, big, early stage bubble like the dot-coms. People should know I've been comparing cryptocurrencies, Bitcoin, and particularly blockchain to the dot-com revolution in the very late 90s that crashed after an early stage, a crazy overvalued early stage bubble. AOL at 400 times earnings, all types of billion-dollar companies with no sales and earnings sort of stuff, just like kind of now. It crashed 95%, okay? Amazon went from 136 to $6. And then we had the great boom in internet and dot-com and retailing stocks, okay, where Amazon, of course, took over the world. And the internet did flourish and become the next big thing. Well, I see blockchain and all this crypto stuff as the next big thing in the internet. It is the internet of financial assets and money. So that is obviously important and maybe more valuable long term. But we're at a ridiculous valuation. Bitcoin, 62,000. I mean, why? Okay? It's used for transferring illegal money. That's right. It's not going to be used to purchase cars at Tesla and stuff. This is baloney. It's not a purchasing vehicle. There's other cryptos that could be, okay? And that's part of the revolution, but that's not what's happening now. So I think Bitcoin has been peaking every 4 years at the end of the year on its halving cycle. But you know what? Bitcoin also has seen most of its massive surges in about 3 months. Bam, and we just saw that from December through to February and March, just a little over 3 months. And we've broken, I just showed it in an update the other day, we've broken the uptrend line pretty clearly and could break a few more ahead. The last time we saw a big run in Bitcoin in the late 2017, December to be precise, stocks had their first big bubble peak about 5 to 6 weeks later in January. So I think if Bitcoin just peaked, and I'm seeing more signs of that, not sure yet, but looking more like it to me, then stocks could be peaking sometime into April. In fact, to make that same approximate lag as last time, it'd be around late April. So maybe stocks just keep creeping up here and interest rates keep creeping up, and then boom. And then Bitcoin keeps weakening as people start to see, oh, wait a minute, the bubble trends. Because we got to remember, and I've never seen so much baloney about stuff as Bitcoin and cryptocurrency. I'm one of the biggest fans long term, okay? I see the potential, but I also see the bubble. Bitcoin is not an inflation hedge. It is not a safe haven, for crying out loud. Bitcoin has been correlating with one thing and one thing only, the bubble, and particularly the stock bubble, which is the greatest bubble outside of Bitcoin. Bitcoin and crypto is like the dot-coms coming at the top of the last tech bubble and making it much more extreme, except that these cryptos and Bitcoin are not in the NASDAQ like the dot-coms were. So they're happening on the side. So Bitcoin's the first sign that something may be going wrong here. Another thing, February, everything's down. Existing homes, new home sales even more. Orders for autos. Durable goods. Wait a minute, we just had the biggest stimulus plan, 44% GDP in the last year, and you're telling me that the economy should not only just be growing, it should be steaming. Any continued disappointments, if we are at the point, which I've been warning, how long, and we're talking 11 years now, you keep stimulating people to buy more than they would, to refinance their home for the third, fourth time and get lower rates. And on and stimulus plans and checks and stuff, and everybody's getting a free lunch. But where do people get where that? Well, I already bought my dream car. I already upgraded to a better house. I already refinanced my mortgage the third to fourth time. And where do people start saying, with COVID and everything, when do they maybe just stop spending? So that's another thing that could go wrong here. But there's a third thing. I don't understand why this isn't getting more press, and it's getting some. China. What have I said for the last decade? China is the epicenter of the greatest bubble in modern history, like the US was of the Roaring '20s bubble. The greatest bubble before this era, and on that ever important 90-year super bubble cycle. China, after being the biggest stimulator of growth in the world and artificial, they don't print money, they print condos and infrastructure. They just build stuff for nobody. That's the worst possible thing you could do long term for the economy and creating excess capacity and deflationary pressures, okay? China is actually, and remember, the reason they could print, be so aggressive in stimulus, they're not accountable to markets, okay? Well, the same thing. They're not doing what other countries are doing. Other countries are doing anything to keep their bubbles from bursting. China is now starting to prick their bubble a bit. They're starting to pull back. They don't want this thing to get out of control and look like idiots, which they are going to look like one way or the other. They've already gone too far. But what if also here, China's slowing of its bubble just starts to cascade around the world. Bitcoin's burst. Oh, by the way, biotech's bursting too. The NASDAQ, the lead duck in this bubble, is underperforming. All those markets are down 10, 15, 17%, including Bitcoin. This thing may be having a stealth peak here, so be on the lookout. I'm going to keep you updated, okay? Because there's no easy way to tell a bubble top like this. You got to remember, my best analogy, and this is the only way to think about something like this. Think of an avalanche. Snow just builds up and builds up and builds up. What causes an avalanche if you don't have an earthquake or something like that? One snowflake, okay? There's another great analysis. You drop stones down in a mound and it builds up tighter and tighter and tighter until one pebble, one stone causes an avalanche in that whole mound of cloud. That's what happened. It's just that final dollar that goes in the market, the last dollar that anybody's going to put in the craziest, most overvalued bubble in history that's going up for no good reason other than printing money and endless stimulus in a dead economy. And if you don't think This economy is deader than 20 doornails after 11 years of unprecedented stimulus, and the most you can get it to grow is 2% and average 1.65%. If that's not dead, what is dead? This economy is dead. And it's just a matter of when something triggers this or the smart money finally realizes. So we've got three things here. Surprise slowing when, my gosh, we should have more growth than ever. And it's not just 5.1 trillion in fiscal and 3.8 to 4 in monetary now. They got a $3 trillion infrastructure stimulus plan. They're going to build stuff for nobody. And everybody says we need infrastructure. That's way overstated. Okay, I'm sorry. I've looked at it. Okay. We're a mature country. We are not growing. Our workforce is never going to really grow again. So don't tell me we need tons of bridges and roads and stuff. We just may need to repair stuff. So they're just going to add more. So I'm telling you, just when everybody thinks, and there's no good reason whatsoever for the markets to break, they could break. And remember one chart. This is the chart I've shown month after month in newsletters and updates, and I'm going to keep showing it. It's the megaphone pattern. Chart patterns don't have to work out, but the megaphone is one of the most reliable. It comes almost exclusively at major tops when markets are trying to make new highs from momentum, but the fundamentals are weakening just like now, and you get new higher highs, but every time you get lower lows. That megaphone chart is saying the next crash in stocks is not going to be 35% like the last one. It's going to be 47, 48, 49%. And that's the S&P 500, not the NASDAQ and the biotech and Bitcoin and stuff like that. So that will be the final death nail to me. If after this much, 44% of GDP and with a 3 trillion infrastructure up to 60% of GDP. I mean, this is crazy to have this much stimulus to grow at 1 or 2%, okay? This much stimulus and the economy still is weak and can't get off its, you know what? And stocks crash and go to new lows after all of this. I don't see how one idiot left in the world, the dumbest person in the world, okay, could think there's not something wrong here, and people start to lose faith in the greatest BS recovery and stimulus plan in all of history. So be on alert. I will keep you updated.